Oh boy, back to work. It's about that time of day again. Hope you guys had a great weekend. Hope you rested up. The first of a brand new week, brand new month, and same great stuff here on this video newsletter. It's Monday evening. It's time to get back to work. We got some great trades setting up for Tuesday. It's the second day of May, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, watch for the first time tonight. If you're here for the first time, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Tuesday's trading session. I got a great video for you guys tonight. Charts are all ready in the background. As you can see, we got the oil, got the Nasdaq, got the S&P ready to go. Glad to see you are here, locked and loaded, ready to go for tomorrow as well. I have a lot of great trades on my radar for Tuesday's trading session. In tonight's video, we'll talk about all my favorite trades. That way you have a roadmap to make some money tomorrow on Tuesday. And of course, before we jump in and get this party going, a lot we're going to cover here tonight. Before we jump in and get going tonight, though, make sure you subscribe to this YouTube channel. I publish all my best trade ideas every evening right here on this video. So make sure you subscribe. A lot of this stuff is very time sensitive too, so make sure you set those notifications, hit that little bell icon. That way you get notified every time we publish something new here. That way you don't miss tomorrow night's video as well. We're coming all week, this first week of May. Also, questions. Any questions for me? Drop those questions in the comment section. I do personally go back and answer those questions, so definitely don't be shy about asking good questions in the comment section. And as always, I appreciate you guys tuning in. If you enjoyed the video as much as I enjoy making it, do me a favor, hit that like button for me. Hit it twice, 3 times if you want. And I appreciate you guys tuning in, subscribing, and supporting this YouTube channel. But enough of the intro though, right? Let's get this intro out of the way. Tuesday is not going to trade itself. First of a brand new month, and where's the money? Where's the low-hanging fruit? Where's the easy money for tomorrow? Boy, you'll notice right now everything's bullish, right? What a difference a day makes, right? What a difference a weekend makes. Everything's bullish right now. Bullish on the S&P, bullish on the Nasdaq, and quite bullish here as we spike off that low on the crude oil. Now, obviously, with this much momentum here, we're looking to buy some pullbacks. We definitely have some pullbacks that we're watching, but one of these markets doesn't really look good for a pullback. I'm going to talk about which of these markets doesn't look great for a pullback, and we'll also talk about as well too, because we get a bunch of resistance, we got ranges. So you know me, anytime we see ranges, we're always thinking what goes up will oftentimes come down, what goes up will oftentimes come down, right? And so, oh boy, we definitely have some shorts, because remember that big move down that we saw last week. You know they're going to be probably a lot of bears waiting up top here on the E-minis and the oil to short this sucker right back down again. So we definitely have a lot to cover in tonight's video as we get ready for Tuesday's trading session. Speaking of Tuesday, though, let's make sure we all get on the same page. Tomorrow could really be one of the calmer days of the week here. First of all, please don't forget we are still going to be dealing with a little bit of the residual volatility, right? Kind of the leftover volatility from the end of last month. If you recall, I mentioned last week, as we transition from a month, the month of April into the month of May, we do expect it to be a bit of an uptick in volatility. And we definitely saw that today. We definitely saw it last week. So there will be a little bit of that volatility tailing off here as we go into this first week of the month, right? We kind of have that transitional volatility at the end in the new month, right, as we come in. As we look at tomorrow's schedule, you'll notice there really isn't much here on the calendar. The big news is definitely going to be that JOLTS report, the job openings, layoffs, and transfer survey. That will definitely be the biggest news of the day tomorrow, but it really isn't anything that would be, that I would expect to have too big of a market moving impact for us tomorrow. What I would expect tomorrow to be all about is about positioning ahead of what will be Wednesday's, what you could argue is the biggest news of the week, and that of course is the FOMC announcement on Wednesday afternoon. Now, this is kind of important for tomorrow, because if you're one of those people that likes to trade all the way to the closing bell, you got to be careful tomorrow afternoon. Usually when you have a big news event on for example, Wednesday, by the end of the day towards, the last hour and a half or so on Tuesday will generally be pretty thin, because a lot of traders are not going to want to, a lot of the big lot traders, they're just simply not going to want to participate in the market when they might get caught in that market ahead of some big news the following day. So just be aware of that, for tomorrow. There's no major news tomorrow. We do have some earnings reports coming out for some of the big earnings, some big energy companies, Marathon Oil. I think did I see Chevron on there somewhere? Might be a little bit of some action there on the oil in the pre-market tomorrow. But again, there's no real major news on our schedule. But like I said, tomorrow will be a bit of a break from news, because then we go into the FOMC, we got OPEC, and oh yes, we got that employment number coming on Friday. So we're just getting warmed up here this week. It's some big stuff to talk about tomorrow night as we get ready for that big FOMC announcement where everybody's pins a rate hike on Wednesday. The question is how much we're going to get. We'll talk about that later on in the week here, though. But again, definitely tune in tomorrow night, and we'll talk more about kind of the game plan for the FOMC announcement. So wide open day tomorrow. Wide open day as far as any major news goes. We've kind of turned the corner on the biggest earnings reports coming out. Again, a little bit of earnings out of some of the energy companies tomorrow morning. So oil might be a little bit jumpy, early in the morning tomorrow. But we'll obviously wait and see what we get. What's the most important thing affecting these markets right now? What do you think? Well, hold on. Back up. Let's get one thing straight. Whether you trade one of these markets or you trade all three of these markets, great to start with one market and build your experience. Whether you trade one or you trade all of them, I'm going to cover my favorite trades on each of these charts as we go throughout the rest of this video here tonight. You're going to learn something new, something you can make some money with. Throughout the entire lesson, I'll provide different trade variations, different setup ideas, different advanced tactics. And you know me, I try to wrap it all together and save the best stuff towards the end of this video. So I'll give you a reason to stick around all the way to the end. All right, let's jump right in though. S&P first. We'll go S&P, Nasdaq. We'll wrap things up on the oil. Let's grab a look at the Emini S&P. What's the most important thing affecting this market right now? What would you say is the most important thing here on the E-mini? The most important thing right now is we have a bullish momentum rotating off the low of this trading range. We had that big bloodbath move down, right, to kind of finish off that big reversal late last week. We got chopped up, of course, here today. New week, new month, new day. Remember, anytime we see a big move in one direction like we saw late last week, the following day is oftentimes a range. And if you watch last week's videos, it makes sense. We had a range at the beginning of today's market. The bottom line is the market shoots lower. The bears, of course, can't hold this, and we run now back higher. The most important thing on this chart right now is we have a lot of bullish momentum, a lot of strength in one direction. Usually, anytime we see a real strong move in one direction, usually there's a very good likelihood we see a pullback and a retest of that high, and possibly even a breakthrough and a measured move, one leg and two leg, right? So right now we know that strength of that move suggests that we're likely to see pullbacks here, pullback, right? Try to buy this thing and retest that high. That's one very important factor on this. Another important factor is where do we think this market wants to go? The markets are always trying to accomplish something. And I would imagine they're trying to accomplish at least taking out that high up at that 41.65. And this is one very key difference between the S&P and the Nasdaq. You'll see in the Nasdaq in a moment, the Nasdaq has kind of quote unquote already completed its objective, which means the Nasdaq might be a little bit less likely for buying opportunities here for tomorrow. We assume the S&P though wants to take out that 65. We assume the S&P wants to retest or take out the high of this triangle. We assume the S&P wants to get up into that pendulum swing. So the moral of the story is we're very bullish. The S&P appears to have more space to go, which I think is a very important part of this. And what else? The range, right? The range, of course, is a really big part of this, because as we go higher, if these buyers can't, if they can't get their act together, they didn't get it over here, right? If they can get their act together, right, we'll break through. But if they can't, there's a very good chance we're coming right back down into that trading range. And again, I'm a day trader. I'm not a long-term trader here, but it's tough to forget that we have this big, huge move down last Friday. And for the most part, all we got was a little tiny bounce today. So it would make perfect sense for this thing to get up inside these highs up here, start to attract in some more of the longer term bears, and then dump it back down into that trading range here at some point here for tomorrow. Those are what I see as being the most important factors here on this chart at this time. How do we buy it? How do we sell it? What do the buyers want? The buyers want to buy a pullback. Because again, they've got that momentum on their side right now. Buyers can buy at support below the range. I like this area right here. Buyers can also buy, obviously, the low of this move. That will require a little bit of a specific setup. We'll talk about that in a second. And buyers can also buy a breakout going higher. Now, obviously, we're going to be careful with that breakout because we're running into some levels of resistance. We could definitely have potential here for a breakout. What do the bears want to do? The bears have to be somewhat careful right now. Until we can really get above some of these areas up here, we really have to be respectful of the buyers and all of their momentum. What do the bears want? I think the bears, because after all, it is an overall bear trend right now, long term, right? Big picture. I think we could easily see a reversal going lower, and I definitely have some ideas here for shorting it on the way down to retest that low. That is definitely something I'm keeping an eye, because obviously this could have just been one big bounce off that low. The bears might pick this up and say, no, we're not done yet. We're going to 4,000. That could easily happen. The sellers can also look for a reversal off this high. This will be the more difficult spot to pick a top, because obviously the bulls have all of the momentum on this, but they can definitely look for that short off that high here. Let's talk about some scenarios here, right? Some trade ideas I'm looking for here tomorrow. One thing that I wanted to point out on this is because of this trading range, I'm not really that interested in buying that pullback right now. It's just not a real great spot for it. I'd rather get underneath some of these lows, underneath this range. And so really what I'd like to do here is I'd like to get this thing to pull back into our zone. We have a lot of support here once again, and I'd like to simply get one of those basically try to get those bears to come in and sell short. And once I get those bears trying to sell it short, remember, we're sitting at a major low back here, right? Range above us, big move higher here. So if I can get this thing to pull back and get into some support levels here, I should be able now to trap in those bears, let them sell. Their stops are going to be sitting right here. And I can use literally those stop losses as fuel, right? For what I call a failure setup, right? And buy into those stop losses, right? Literally buy into those stop losses for a run back up to retest the high. Strong move up into an area of support with a range above us. I like that setup. I like it a lot. Now, what if we keep going lower? Right, we're going to keep going lower here. What if as the market pulls back, now the market begins to kind of grind down? Yeah, see, that could easily happen here as well. Like I said, it's an overall bear market. Maybe the buyers are nowhere to be found. The market kind of grinds down here. What you want to do in this situation, one of these pop and grinders, is simply draw a trend line off that low. Bring it up now around those highs, okay? And repeat after me. First test is the best test. Now, my favorite way to take these shorts is to get right above a prior swing and look for a trap setup. Now, we talk a lot about traps in our trade room, and I know most of you guys and gals who watch this video every evening, you've taken the free trading course, you've learned all about traps, you know about the first test is the best test, you know the rules, so you know when to take them and when to skip them. But if you're here for the first time, if you're one of the few folks who hasn't taken that free course and not applied this, I got so much good feedback last week. People making money on their own account just in the free course. And so if you haven't grabbed it yet, I would definitely encourage you. I'm going to put a little link up here for you. in the upper right hand corner, grab that little pop-up and learn the trading strategy that we use every day in our trade room. If you hate missing the best trades each day, or you're sick and taking so many losses, if you're looking for a roadmap to help you transition from a full-time job into a full-time trader, that's the roadmap right there. You'll learn all the entry setups, the rules I use, and you'll see a lot of examples of how we apply, things like this, right? Things like a pop and grind, how we draw those channels, how we look left and find those prior swings, and how we use those for traps or failure setups or pullback combinations. Really like that move, going lower here. So if it really starts to accelerate as we're going down, I really like that short, again, off the high of that channel. Now, let's say we do end up all the way down at those lows. How on earth would I buy off of that low? Well, look what happened over here. Notice how the market ran lower, and then see how it pulls back. It pulls back. The bears try once, the bears try twice. We call this a two-try failure, and that's exactly what you want to look for over here. I can't just blindly buy it. You know what I mean? Because again, we'll be so bearish at that point. But if I can find a way, and this will also apply to the Nasdaq as well, obviously. If I can find a way back down to those lows here, now what you want to kind of memorize is this key combination. First, let those bears try twice. Let them kind of like back here, right? Let them dig their grave there, and then again, range above you. Okay, magnet, support level below the range. Bears are coming in. They're going to try a couple times. Everybody piles on. Their stops are sitting right there. What I would do is draw a little trend line off that low, find a trap off that low. Love traps mentioned earlier. And that's going to give us now, if I can get a little trap below that low or a trend line bounce, nice strong signal candle coming there. All those stops are sitting right there. We can buy right into that pain, right? Use those stops as fuel to go back in. That, of course, is a two-try failure. Two tries, because we're so bearish at that time. Now, as we go higher, your job ain't over yet. No. The fun is just beginning. Now, as we go higher now we go out, and I want that first pullback, right? I want that first pullback. So what I'm going to do is I'm going to find that new channel by drawing off the high, by drawing off that low. I'm going to drill down. I'm going to find those prior swings. The goal is to get just below the moving average. Because when you get underneath the moving average, you begin to trap in traders who are trying to get short, right, off the moving average. Once they get short, then you got them, and you can buy right into those stop losses. The easiest money you're ever going to make in trading is when you are getting long, when short sellers are caught on the wrong side of the market because they got nowhere to run. They have to get out. The only way to get out of a short position is to be a buyer. So that's as the market goes lower here. Some food for thought here if we go lower. What if we go higher here right now? What do you think? What's the best plan of attack if we go higher? Well, what you want to think about if we go higher here is you want to think about with that move up, it's still going to be quite strong. So we can still look for that pullback. It's going to be a little bit of a different pullback, though. We'll talk about that in a second. And then again, if we can get up in these areas here now, I love the idea of a short on the way back down again. So let's say, though, that for now, we end up going a little bit higher here. Right? And now we're up around some of these levels of resistance. Why is this important? Because at this point now, we've completed the objective. We've kind of completed where we think the market wants to go, right? The market took out these lows, and we have a feeling the market wants to go back up into this area. So we got to be careful with this area, right? If we get up in that area, it's great. Momentum is great. But now as we pull back, there aren't going to be as many buyers here. There'll be a lot more buyers to buy this pullback right now because, again, we have channel, we got a lot of momentum. If we go higher here, though, you have to think a lot of those buyers are going to walk away from this. So we're not going to have the buyers to help us. We're going to have to leverage the sellers to help us. And this is exactly where, we talked about that two-try failure there. This is exactly the situation where we need to use that two-try failure here once again. We're going to wait for that pullback, get just underneath that moving average, let those bears try twice, right? Let them sell into it. And again, they're going to try to go back down into that trading range. At this point, we have a lot of momentum on our side here still. There's still a very good chance to retest the high. Once those bears come in and they get short, we know the stops are, and this will literally kind of short squeeze, right? It'll kind of magnet and drag this thing right back up to retest those highs. This is the best way to buy that pullback before we get a breakout, basically. And we'll talk about a breakout here in a second on the NASDAQ. All right, so I'm going to cover some breakouts here on the NASDAQ once we get deeper into this video. Now, how would I sell off this high, right? How would I sell this thing? So there's really kind of two ways you can sell this. As we go higher here, and again, I would really want to try to sell this thing at least up around that 65 area. At least take out that high, or even better, get up into this, 4180, 4190 area. If we can get all the way up, now there are two basic scenarios we'll look for. One is a crown reversal, where we pull back, the buyers will try to buy it once. We'll go lower. Pull back, buyers try to buy it twice. We see a trap above that high, crown reversal. You'll notice again, we're incorporating a level of resistance with a range below us. The reason why we have to be patient on this is because of all of that momentum. Now, I do realize that markets do V-bottom all the time, but I'm warning you right now, it's a good practice to think the stronger the move going higher, the bigger and more obvious those two tries need to be. That's a very good rule of thumb to follow. The stronger the move you're trying to reverse, the bigger and more obvious this crown reversal or this two-try reversal needs to be. Okay, now another one you want to watch. Oh, and keep in mind too, as we go lower here now, find that new channel, right? And then look for that first test off of that high. So again, we go up, we take those highs out. The buyers are trying for a breakout up here. They try once, doesn't work. They pull it back, they try again, doesn't work. Well, it tries to. It makes it above that prior high. Nice big juicy candle, right? Closing below the moving average. That's right. That's your short right there. Now, we drop down off that high, lower low in price. Connect those lows, connect that high. And then again, we're looking for any of the setups that you learn in that free course, okay? So failures, traps, pullbacks, maybe some strength as you go back down off of that, back down to those lows here. Another option would be, let's say we do go up. Let's say we do pull back under the moving average, 1, 2, we get that long, and now we retest that high. What do we call this again? Mission accomplished. Anytime we see a strong move in one direction, we know the odds are pretty good. They're going to want to retest that high, okay, even in a range environment. So once they do retest that high, now we can actually be a little more aggressive. Now, obviously, a 1, 2 with a trap would be ideal. But we don't need that anymore. Now all we need is to get those buyers trying once, buyers trying twice. A trend line will work just fine on this now. We don't need to be as conservative or patient, right, on the entry, because now the buyers already got what they wanted. The buyers are already done buying at this point now. These are the weak hands, right? These are the marks at a poker table. These people who don't know what they're doing, right? They're buying aggressively at the high. Well, in their eyes, they're not doing anything wrong, right? Stops are right below that low, and now we can look for again, find that nice signal. You'll learn about this stuff in the video course, right? And there's your short going down. As we go lower here, where does the market want to go now? Remember, it wants the pendulum swing. It wants the amount above here, the amount back down here. It wants to go back and take out those lows again. Markets are always trying to get somewhere. Once it takes out these highs and begins to reverse back down again, it wants to go take out those lows. Okay, so now we go out, we find that new channel. And again, we look for that first test is the best test off the high of that channel. I love traps, but any of the setups we teach in the video course will work off that high. Okay, those are some great ways to sell off that high. How about some breakouts though, right? How do we break out going lower? How do we break out going higher? Let's cover some breakouts here on the NASDAQ, because the NASDAQ has, well, you'll see. And a lot of the stuff we're talking about here tonight will certainly be interchangeable. between the S&P and the Nasdaq, because you'll notice they're very similar, overall. What's the most important thing here on the Nasdaq right now? The most important thing is it's a range. You'll notice again the range right in the middle. Ranges act like magnets. In a range market, we find levels of support below and we buy at support levels below. We find levels of resistance above and we sell resistance above. So right now we're at resistance above that range. But what do you think about this little momentum right now? It's very strong, right? Look at how strong that move is. So what do we always talk about? Anytime we see a strong move in one direction, we have to respect that momentum. I don't care if I have seen V tops and V bombs in the past. I have to respect that. Okay, so I want to anticipate now. Obviously, a pullback and a breakout, a pullback and a double top, right? Back down into that trading range. So you could easily say the Nasdaq is very bullish. And they have completed their objective, right? Mission accomplished. Because when the buyers pick it up down here, where do they want to go? They want to take out those highs. That's the only thing on their mind, right? And of course, those highs happen to be right around the pendulum swing. Compare that to the S&P. And again, you can see why I can be a little more confident being a buyer right now in the S&P, because we haven't completed the objective yet, right? We have not completed the mission accomplished yet. Hope that makes sense. So the Nasdaq is a little more difficult to want to be a buyer right now, right? What do buyers want to do? Buyers want to buy a breakout. That's what they want. And buyers have a great shot here for a breakout going higher. Buyers would also like to buy a bounce off of that low. Buy that bounce off the low of that trading range. You'll notice a little triangle drawn on here off the low, off the high. So buyers have to be a little patient right now. I definitely don't like the idea of a pullback and a retest right now. That seems to be a little bit less than reliable on this, again, because they've already accomplished this objective. As we go higher here, obviously, buyers can buy that breakout. Look at the space above them. This is the same thing in the S&P. We have all this wide open space here because remember that big move down, right, that we saw that we saw last Friday. So buyers would love a breakout, get some big objective up there at 13,550 here. The Bears have more options right now. What would the Bears want to do here? Again, the Bears can look for that crown reversal off the high. The Bears can look for that double top reversal, right, off of that high. They can look for one of those pop and grind channels, pop and grind first test trap channels. You can see a great example right there. Would love to get one over here. You know what I'm saying? Right? So we go down, pop down, grind down, find that channel, hit that first test, just look left. You can see an example of that right away. So bears have a lot of options here right now. So do the bulls, right? The buyers do too. And if you're smart, you won't care what direction you trade. You'll simply trade the best setup that you see. So let's talk about some breakouts, because we've already talked about that pop and grind, right? That pop and grind's pretty easy, drops down, right? Find that new channel. And again, we know the market wants to take out that low. So we find those shorts off the high of that channel. If we end up all the way down, what do we do again? We want to buy down here, but what? It's so bearish though. So what do? We use the 1, we use the 2. Why? Because we're going to light those stops up like a Christmas tree, okay? We'll use those stops to get lit up, right? We literally use those stops as fuel. I also can see there's a trend line over there, which might just help out that bounce as well. Not required, but definitely not going to hurt, right? We buy into those stops, and then again, we find that new channel, and we buy that first pullback. And again, I say first pullback, but usually that'll be a failure setup or a trap setup. The same stuff that you're going to learn, of course, inside that inside that video class I mentioned earlier, right? And by the way, if you haven't done so yet, make sure you grab that link that popped up there in the upper right-hand corner. You're going to love that course. Okay, so we've already talked about that already. How about a breakout going higher? What would be a couple breakout patterns going higher here? So there's quite a few options here. I've got 4 different breakout patterns. We can talk about a couple of them here, and we'll talk about a couple more here on the oil. So the first one is let's say, for example, that we do get that pullback, and the market jumps and runs higher. If we see what I call a 1, 2, 3 breakout. Remember, it doesn't matter how strong the initial leg is. They have to actually go and hold that pullback and go. That's the only way we can really trust a breakout. We see a lot of times where you'll see stuff like this, where it'll try to hold that pullback and fail and end up running back into that range. So they have to be able to hold that pullback and go. So if they can hold the pullback and begin to jump now, okay, so if we can get this kind of 1, 2, 3 move, remember it's going to jump off that moving average. Now we know, we have a bull trend now. It's not just a bullish move in a range. So now we trade like a trending market. Trending markets love channels. So we find a channel off that high, almost always, and nothing's ever a guaranteed, certainty, but to almost always draw those channels backwards. Draw them right off those highs, bring it right down to that low, and then again, just think about how can I get underneath the moving average, right? Trap in those bears and use that failure pattern. Okay, what I always going to talk about is if we can get that 1, 2, 3 breakout going higher, mark off that high, mark off that low, find your trap levels, get underneath, or ideally get down to that low of that channel here. If you can grab a trap. If not, rope in those bears, trying to get short, and we can use their stop losses as fuel for that trap, that failure, and that pullback combination. Where do we think the market wants to go at that point? Again, we get a pretty easy idea of where it wants to go. We've got a range up here. I would say pretty obvious, that range, 13,350. I would say these levels up here will make some really, really nice targets, right? That 13,450, 13,400 area, those levels just above that trading range. I would love to think we're going to make it all the way back to those 13,550 highs tomorrow, but who knows, right? Who knows? Right now, we need to see a little bit more of a miracle to get them to go that far. That's definitely one breakout that we can use here. Also, how about a pop and grind breakout? Absolutely. Look at this one. So it's already kind of setting up right now. What if this thing was to keep on grinding higher here, right? What if it keeps on grinding? What do you do then? Do I look for a big channel like that and say, oh, come on, baby, come back to it? No, right? When you see, grind like that, you draw it right up off those highs and you bring it right down to that major low and you wait patiently for that pullback. Okay, ideally you want to get below a prior swing, underneath some of that moving average, trap in those bears and pop from there, right? Target back up to retest that high. Because again, anytime we see a strong move in one direction, we expect buyers to buy into the pullback and take some profit of the high, leave that runner up to that 13,400, 13,450 range that I just spoke about. Another breakout pattern here, which I love, is a 2-try breakout. So strong move up, real strong. It'll be obvious. It'll be a very strong move. Shallow pullback and a higher high in price. Anytime we see this pattern, we always know there's going to be a lot of pros waiting to buy right below that low, right? That stop. Or as we say in our trade room, strong move, shallow pullback, higher high in price, traps, baby, right? Traps are always the best in that scenario. I almost should call this the FOMO breakout because it's basically what it does, right? It pops up. That strength makes everybody scramble to buy the pullback. The pullback is very shallow, which means none of the Fibonacci traders are getting in. None of the deep pullback traders are in there. And so when it makes that higher high, it again, the fear of missing out is huge. So when it pulls back below that low, everybody wants that trap. Now, a good rule of thumb on this is usually the size of that first leg is the size of that third leg. Okay, kind of a good rule of thumb on this, right? So if it really is a big breakout going higher or big pop going higher, that first leg is oftentimes going to be equal to that final leg, that follow-up leg after the entry. And again, we get a pretty idea of where the market wants to go, that 13,400, 13,450 area we mentioned before. So definitely keep that on your radar for some breakouts as we go higher here. Again, I would really, really like to see one of those 1, 2 with that crown reversal back down, or even better, let them buy this, pull it back, And then once they retest, now get the weak hands involved, right? Get the scared money involved to buy foolishly into that high, and then use those stop losses basically as gasoline, as fuel, right, for that run back down into that trading range. And again, rinse and repeat, 1, 2, and go from there. All right, looking good. And again, don't forget, you can apply any of those breakout patterns as we go lower. So we take the lows out. We come down, the bears hold that pullback, and they jump. Didn't do it here. Didn't do it here. They have to do it here. If they can give us a 1, 2, 3 breakout, it's easy. Mark that low now, find that high, drill down. Again, I'm simplifying this pretty much, right, for simplicity, but again, drill down, find your entry off the high of that new channel. Or maybe it runs lower and just shoots and pushes all the way through. That happens all the time, right? We call these slingshot breakouts. Slingshot breakouts are basically when a market will wind up and spit out the other side of that range. But guess what? All that momentum. So find that steep channel, anchor off the high, wait for that pullback, get those traps, those failures, and retest that low. Lot of options here right now for the bears. If, again, the big if is, can they hold and break through that major low? Get a really, really good, nice chart that'll work with, though, on the NASDAQ. All right, last but not least here, over on the oil. How am I doing so far, by the way? Are you enjoying the video? Can I get a thumbs up? Maybe a hell yeah in the comment section? I'll tell you, if you're still watching this video right now, you are the person I make these videos for. Not many, people who dabble in trading don't watch a video 35, 36 minutes into the video. So I'm very happy to have you still here with me. I hope you'll consider subscribing and definitely make sure you grab that free trading course. And also too, in the comment section, if you don't mind, the comment section, let me know what the biggest obstacle has been for your trading. Has it been psychology? Has it been finding levels of support and resistance? Is it timing the entry properly? Is it trade management? What would you say is the biggest obstacle you're dealing with right now in your own trading? I'm always trying to find new ways to make these videos better. So if you're still watching this video right now, I really do care about your opinion. I would like to help you as much as I can in these videos. So let me know what's most important to you down in the comment section. While you're there, make sure you hit that like button and subscribe while you're there. What's going on the oil? What would you say is the most important factor right now on the crude oil? Spike and channel. That is by far the most important factor here. Spike and channel. Spike up into a channel. Spike and channels are a top 5 chart pattern. Everybody should learn a spike and channel in their trading career because they are very common and they're very, very reliable. Spike and channels, first of all, spike and channels in the very basic sense, they are very strong momentum with no pullback yet. So when you see a spike in channel, and again, spike up, right, into a channel, okay? When you see a spike in channel, the first thing that comes to mind, to me at least, is we have a lot of momentum, which again, anytime we see a strong move in one direction, we expect a deep pull, not that deep, right, but a pullback and a retest the high, okay? And again, a spike in channel has not pulled back yet. Yeah, there's some little ticky-tacky pullbacks right there. You know what I mean? There's little tiny guys right there, but those aren't enough. Again, that's not where the big, liquidity comes in. That isn't where the big buyers are waiting here. They're waiting down. Where are they waiting down? They're waiting down to the base of that channel. I personally really like this spike in channel because, again, it's a very strong move. So we know the odds are pretty good. They're going to pull it back and want to buy it. I really like how I can take this high. Remember, I almost always draw my channels backwards. I mean, this one's a no-brainer, though. Look at the highs, and then look down the lows. So, I mean, come on. I would love to get that deep pullback right down in that area, that 103 area, 102.75 area. That whole area right there seems to be a really good spot there to buy a pullback. The size of the breakout leg, okay, the size of a range, because it was a range here, the size of the range breakout leg is oftentimes equal in a measured move, okay? Obviously, this is not equal, but if we pull back right now, the size of that leg can really be kind of superimposed over here and used as a big objective going higher. So spike and channels the big thing right now, right? This is the big thing right now. What else do we see here on this chart. I think also too, it's very important right now to think about, where do you think this market wants to go? We're always talking about the fact that markets are always trying to accomplish something. Our job is to figure out what they're trying to do next and get in before they get there ultimately. Look at the chart right now though. What would you say I gave it away. What would you say the market wants to do here? I gave it away. The buyers, right? Look at that strong move going higher. You set me up on this. You set me up. Anyways, I'm joking with you. Strong move up, right? Where do you think these buyers might want to go? Okay, they've already taken out this high, and it seems they're holding that level, doesn't it? It does. If you had to guess, where do you think the buyers want to go next? They want to retest those highs, of course. 108. Now, there's a challenge here. Okay, here's the challenge. The challenge is unlike the S&P and the S&P and the NASDAQ have a football field, American football kids, football field open right above us. We don't have a lot of space above us here on the oil. So even though we have some more room to go, we've got to be aware of our surroundings here. There's a big top right there. And right above that area is another big top. So we have to assume there's quite a bit of place to take some profit, as market goes higher here. So that's, again, I think that, we obviously are very bullish right now. How do we trade this? Buyers, right? Buyers want to buy a breakout, but they want to buy a breakout carefully. Buyers want to buy a pullback. They want to buy a pullback. You could also argue that buyers could buy off this low, right, for a double bottom reversal. That, of course, is yet to be told yet. What are the bears going to do right now? The bears have to be careful because unlike the S&P and the NASDAQ, we pretty much said bye-bye to that range a while ago. That range really isn't affecting this market anymore. Whereas on the S&P and the NASDAQ, the range is still the king or queen of the land, right? You know what I mean? The range is still in the back of our mind on the E-minis. This is like what range, on this market? So to be a seller right now, really the best way to do this is to wait for a double top, right? And then look for that short back down, or look for one of those pop and grinds, a reversal going down, which I think is probably one of the best shorts we're going to get here as we go lower here. Okay, so how do we buy it? How do we sell it? What do you think? The 2-try rule is going to be the most important thing here for tomorrow. So one, I love this pullback around this 103 area. Okay, but what if we only pull back right here? Because as I mentioned earlier, the base of that channel, right? The base of that channel, where this channel and the spike collide right there, that is typically where the buy zone is. But that's not, as you can see, it's not really in the best spot for us here, as you can see. So the 2-try rule is really going to be important. If I have a shallow pullback, I always look for a trap entry. Okay, you guys have probably heard me say this a lot before. Anytime we have a relatively shallow pullback, I like to look for traps. Okay, traps allow you to buy as low as you can. By definition, a trap low is as low as you're going to get it. Right? So traps are the best way to buy it on a relatively shallow pullback. On a deeper pullback, though, this is where we have a lot more flexibility, right? Because now, again, we got a support level, nice strong trend here. This is exactly where you start looking for those bears to come in, get those bears to try to sell it short, going back into that trading range. Again, strong move up. It's going to want to retest that high. Once those bears get short, we know where stops are. We can use the failure pattern. We can grab that first pullback off the moving average, okay, as we go back up to retest those highs. Failure into pullback combination. We talk a lot about that in that free trading course, okay? Be aware of that. Now, what if as we pull back, what if the bears come in and take control with a jump off the moving average? Whatever do we do then? We now flip it. Once the bears jump off the moving average, like that, hopefully not that big, but once they jump off the moving average, now find that low, find that channel, and again, first test is the best test. We're not going to sell that first pullback there, but once we get that 1, 2, 3 move and momentum shifts, now we get aggressive. We find whichever entry setup we can get our hands on off that high. Targets are where? Yeah, targets are back down to retest these lows. That 100 just makes it such an easy number to shoot for, right? And we know the bears want to take out those lows anyways. Now, another option, we pop. Okay, we pop. But instead of now pulling back and jumping, now we grind and we grind and we, you know what I mean? You know what I mean? Same idea. We mark off that low, anchor off that big high, find that prior swing, traps, baby, failures, pullback combinations. Where's my target? Back down to that low. Don't miss that first test. It's the best test. Okay, as we go. What if it goes sideways up here? What do we do then? What if it goes sideways up here? What do you do with the bull market into a trading range? You find levels of support below the range. The range is a magnet. We get a bull bias. We wait for that pullback. We wait for the sellers to try to short this thing, and we grab that failure. Now, your job ain't over yet. Where does the market want to go from there? It wants to retest the high. It wants to pendulum swing back in the opposite direction. So what do? You make sure once that trade starts going in your favor, we drill down, we find that new channel, and we trade the turn. Trade the turn off of that channel. The goal is, very important here, very important. We want that entry, ideally, before we reach the other side of that range. Does that make sense? Right? Makes sense there? Okay? So it's a failure, again, off support below a trading range. We then find that new channel buy, connecting off the highs, off that low. And I want that first pullback entry. And again, I say pullback. It could be a trap or a failure setup too. I want that entry before we reach the other side of that range. Because for all I know, what's going to happen? It's going to go back up. It'll retest that high. And then 1, 2, see ya, right back down again. Same idea we've been talking about so much already here on this video. What if we go higher here? Again, what's the big concern about this spot? Not a lot of space. A lot of momentum, not a lot of space. So as we go higher here, your number one priority is to buy as low as you can. So as we're going higher, we're finding new channels. We're focusing on, again, on trap entries. Why traps? Because traps, by definition, are where the best long entries are going to be. It's also where a lot of the smart money traders are waiting to get in. Right? They're waiting to get in underneath those areas because that's where they can get big fills on big, good, juicy positions. So as we go higher here, all the breakout patterns we talked about so far are going to apply here. But be aware, your entry needs to be a trap as we go higher. And it's very easy to think that we might see this market jump up, right? Get the little trap going higher here. Get that, again, into some of these areas of resistance, get that retest of the high, and then all of a sudden the buyers come in and go, oh shoot, we're struggling up here, and then right back down again, find that new channel. Again, I won't beat this to death tonight, right? But we've talked about this already. The two-try failure. The key is it goes up, it pulls back, it retests, mission accomplished, 1, 2, see ya, and short that thing back down again. That's how you play both sides of these markets. In a very strong bull trend, you buy the pullback, anticipating that retest. Then it's 1, 2, see ya, back in the opposite direction, especially if there's a range involved. Now, guys, this is the easy stuff. Okay, I'm covering all the easy stuff here tonight. The hard part begins tomorrow. Tomorrow, we're going to take this plan and we're going to execute that plan. And I'll tell you right now, the best place to do that is right in our trade room. If you're, relatively new to trading and you still haven't been able to put the pieces together, or you're experienced, right, but haven't quite got all the roadmap, dialed in yet, you're going to love our trade room. Our trade room is the great place to learn and trade along. I have all the spreadsheets, all the software templates. Everything's ready to go. We're opening up tomorrow, 8 o'clock Eastern time for all the advanced members. I'll put all the membership links for you right in the description of the YouTube video. So grab those. At the very least, grab the free trading course. Get the roadmap there. That'll get you ready for, hopefully in the future, we'll see you there trading with us in the trade room as a full-fledged member. Don't be afraid to call the office. I know I talk quickly on these videos, but call the office. I'll be here the rest of the evening tonight. I would love to slow it down, answer questions, go over the best chart, software, brokers, computer questions, anything else you want to help with. Even if membership to our trade room isn't a good fit for you right now, I'll still be there to help out every step of the way. All right, guys. Once again, great to have you back. Boy, what a week last week. It'll be tough to beat last week, but I think we're up to it. I think we're up to that challenge here this week. Brand new month. We get a kind of a wide open day tomorrow. Looking forward to a good day tomorrow in the trade room. I will see you tomorrow morning at the opening bell in the trade room with the members. If not, you better come back and see me tomorrow night. We're going to get ready for FOMC day, Fed day in tomorrow night's video. That's it for now, guys. Rest up. Hydrate tonight. Get a good night's sleep. I'll see you guys tomorrow. All kidding aside, have a great rest of your evening. Be well. Be nice to each other. And you better be here tomorrow night on this next video. All right, guys? As always, adios, amigos. Bye-bye for now.